Okay, so I just wanted to show you what the final balance sheet would look like and some important parts of the balance sheet. Your balance sheet has a title, and every title has three parts to it. You should have the name, young company. This is actually an answer key of a question you're going to see a little bit later in this unit. On the first line will always be the company name. The second line will be the name of the report, and in this case it's a balance sheet, and the date in which the balance sheet is being made. On the left-hand side you'll see assets. It's centered in that column, and you list all of your assets in alphabetical order. The order actually doesn't matter because if you notice, the book has supplies ahead of prepaid insurance. They actually should be flipped if they were alphabetizing. So you won't lose any marks either way. So you list each of the titles or the assets and how much money each is in each of those accounts. Cash has $1,000, supplies has $800, and prepaid insurance is $500. At that point, you'll stop. You won't total your assets just yet because on the last line, your two totals need to be on exactly the same line. So you stop there, move over to the right-hand side. You're going to center the title liabilities, and then you list all of your liabilities in alphabetical order and how much you owe each of those businesses. Okay, then you're going to total where it says total liabilities, and you total the $100, $350 to get a total of $450. Hopefully this lets me right on here, but you're going to draw a line there. Listing total liabilities is $450. Then you stop and you write your total or your title for capital in the center, and you list the owner's name. In this case it's Walter Young Capital, and you list that this person has a capital of $1,850. And to find that total, you would take the $2,300, subtract the $450, gives you the $1,850. Then you put a line here to show that you're adding, and you're going to add the $450 and the $1,850 to get a total of $2,300. You make sure then that you put that on the next available line, and you go straight across from that line, and you put your total assets, also $2,300. If they equal, if your left side equals the right side, you double underline each of your totals to show that your work is complete. Now, I didn't use a ruler. You're going to make sure that you do that each time you draw a line. Okay, so that's what a balance sheet looks like. If for some reason your totals don't balance, you know you've made a mistake somewhere, the first thing you should do is go back and re-add and make sure you haven't made an add error. Okay? Okay, so let's just say you've got your balance sheet done then. There's another important aspect that you need to have, and that is called a chart of accounts. A chart of accounts is something that your company starts with, and it lists all of the accounts and the account numbers. So it has two lines in your title. You have Miller Service Company. Now this also is an answer key that you're going to do a little bit later, okay? Then you've got your chart of accounts. Your assets are always in the 100s. Your liabilities are always in the 200s. And your capital is always in the 300s. You're going to list each of your accounts. The question always tells you what your assets are. And you're going to give them numbers going up by 10. The reason why they go up by 10 is that if you were to get another asset, need to fit it in there somewhere, say you've got one right here, you would be able to give it a number like 115 or 111 or whatever you happen to give it. So that's why they're saying 110 for cash, 120 is office supplies, 130 is prepaid insurance. Your liabilities, account number 210, Midtown Supply Company, 220, Wheaton Finance Company, and then capital, 310, Delmont Bush Capital. So that would be his name. For accounting 10, you will only ever have one owner, but in some companies, a little bit later in accounting 20, you could have 2 or 3 owners. Okay, so the reason why you're giving assets numbers instead of just names is because it's easier to keep track and keep them in order if they're numbered. And that will come into play a little bit later as well. Okay, so if you're ever asked to do a chart of accounts, that's what it's going to look like. Okay, the next step that you have to do, you've already done your balance sheet, you've already done your chart of accounts. The second or third thing that you need to do is you need to prepare a general journal. And this also is an answer key for what you're going to be doing a little bit later. This is the important part of a general journal. A journal is just a place where you jot down important information. An accounting general journal is exactly the same thing. You list all of your assets. Now, from our balance sheet, we had 3. We had cash, we had supplies, we had prepaid insurance. Your document number is Memorandum 1. Memorandum is just a note that you give yourself that would tell you what each is in each of these accounts. The question will always tell you what document number you're using to fill in this information. Sometimes they say it's memorandum number 1, number 2. It's just a matter of putting it there. For the sake of this, you're going to see, sorry, I just had a knock at my door. For the sake of this part, these are going to be empty right now. So nothing will be in yours. You'll see at the bottom here it says note. The posting references are part of the solutions, and it's actually for another assignment down the road. So you're going to pretend like those have nothing in them at the moment. Our cash had $600 in it. And you remember how our assets were on the left-hand side? When we go to put our totals in, do you see how the debit's on the left-hand side? That means your assets are going to have debit balances. Then we had our liabilities. So we have a liability here of Myrtle Burt and Mort Cohen. These are liabilities here. Remember on the balance sheet, these liabilities were on the right-hand side? Same thing holds true here. These are going to be on the credit side, which is the right-hand side. Myrtle Burt, we're going to owe them $150. Mort Cohen, we're going to have to owe them $400. Okay? And then this over here, Yu Chang Capital. Remember how capital was on the right-hand side of the balance sheet? So therefore, our total of $1,350 for capital will also go on the credit side. Okay, so that's what you need to know. When you're doing a general journal, it's just a list. You don't have to total anything. You don't have to make sure anything balances. It's just a total of what your business is starting with in each of these accounts. Okay, so I hope that helps. Okay, so you'll see here, and you can see these notes, you should maybe write them down as well. You have general journal of 4 parts. You have the date, the debit, the credit, and the source document. It says here, always check accuracy of an entry, make sure the left side equals the right side. You can do that to make sure you're right, but you don't have to total anything. Okay, there's also something called posting into ledger accounts. I'm just going to open that up for you to show you what it looks like. I'm hoping I have one here for you. Okay, so you see there's a chart of accounts. There's your balance sheet, we've already talked about. There's your general journal. From this point, you're going to take everything and you're going to make a ledger account for cash, medical supplies, office supplies, or whatever your assets, your liabilities, your capital are. Okay, so this is called a general ledger. Each of your accounts is going to have its own ledger. You think of these as like recipe cards. So anytime you deal with cash, you're going to record it into one of these little ledgers. The reason why you do that is because you want to make sure that at any time you can know exactly what you have in your accounts for cash, all of your supplies, your liabilities, and your capital. Okay, so you open a ledger account by putting the account name in. So let's just say cash. From our chart of accounts, we gave cash an account number of 110. So you open that up with 110. Okay, so now you always have to record the opening balance. Now the one I showed you before, I don't have an example of a ledger for it, so you'll have to just bear with me. That's why these numbers are going to change. You put the date, the year and the month, and you put a date, whatever day of the month it's happening. The post reference, instead of it just calling 1, we're going to call it G1 for General Journal page 1. Cash, we know, has a debit balance, so you're going to put $1,400 there. It had no money in it before we put the $1,400, so we have a balance. This is a balance debit of $1,400. Then eventually, as we learn more in accounting, we're going to keep adding to this, and this balance over here is going to keep changing each time. But for the sake of it, at this point, we only have an opening balance, so this number will always stay the same. Okay, let's say then our next asset is medical supplies, and its account number is 120. It has an opening balance of $1,550. We know assets have a debit balance, so therefore it has to go on the debit side. This example also has office supplies. Okay. And if I scroll down, it has companion pet store. Now remember, that one's going to be a liability. So you'll see companion pet store, account number 210. Has the date here again. Instead of G1, it's going to have G1. It has a credit balance of $100. That means we owe companion pet store 100. We know it's liability. It has to have a credit balance. Okay. Okay, and if you continue, you have Medico Drug Company, which is also a credit. Right to the top here. And then you have Veterinary Supply Company, which is also liability with a credit balance, and you have Kenneth Roseman Capital. We know capital has a credit balance as well. Okay, so I hope that gives you a little bit of an example of what you're going to see. Okay, so this is ledger accounts. You have your date, your post reference. That would be like the G1. We have the debit. If you have anything in the previous debit, you add them together and you post reference in your general journal. Haven't shown that to you yet, but I will in a moment. Okay, so if you were to start an accounting system from scratch, these are your 4 steps. You would prepare a beginning balance sheet. You would prepare a source document for the opening entry. You would record your opening entry in a general journal, and you would post to general ledger accounts, which we kind of all talked about in one. Some common practices: words are always written in full unless your space is short, then you can abbreviate if you need to. You never use a dollar sign or a cent sign or decimals. When you have even dollars, you have to put the 00 in the cents column. A single line always shows that you're adding and subtracting, and a double line shows that you've completed the work and that it's in balance. And you always want to make sure you're being very neat by using an eraser or a ruler, and make sure you use a pencil that's easily erasable. Okay, so this is what your assignment is. You're going to write this down. And as you do each one, I'm going to get you to look at the answer key instead of doing all 4 of these at once. And the substitute will show you where you can get those from. This problem hand in right here, 2-4, that's what you're going to hand in to me for marks. All of this is just for practice, and the answer keys will be up, and you can refer back to them as you go. When you're done your hand in for problem 2-4, it's time to review, and you're going to define your accounting terms and do the questions. And we're going to mark those together. And then you're going to be ready for a Chapter 2 test, which we'll talk about in a little bit.